I definitely finance it. You know, it really depends where you're coming from. I would say I probably put 500 million euro in one of the fund of MGPA and let them in doing their job. Otherwise, I think it really depends what you're expecting. In France, I will personally probably, you know, protect a third of, you know, of that and invest in a retail, because I agree with what you said. I'll invest in retail long term on a third of it. A third of it will probably be a bit more core plus, buying, you know, core kind of core plus opportunities, well located, Paris first ring, office space, because that's what I can do, that's what I know. So probably be, you know, an income producing, but to a kind of a distressed price. And then I'll probably invest a third of it into speculative development, because again, as probably you guys understood, I'm convinced by the fact that the supply demand imbalance of grade A space, and that's exactly, I mean, grade A space is exactly what tenants are looking for today. So it'll be third. Probably that's what I'm going to do.
Okay, good. Raphael, let's do you to say that we're efficient with the microphone going down.
Well, we know we are a listed company, so we have a quite disclosed investment policy, so it won't change. It would buy office building less than 10 years old, at least 75% let or pre-let, and so between 50 and 200 million euros. And so, given the size, very likely in the first ring of Paris.
Okay, and if you were allowed to step outside of that,
only office,
would you still stick with that, even if you were allowed to step outside of that? Yeah, you would do. Okay, good.
If the market is very, very liquid.
Okay, excellent. Roland.
Well, unfortunately, the times where bankers had to consider a 500 million investment is far from being over. If I had, I would make an offer to Jean-Philippe to buy Le Madeleine. I would make him an offer without suspensive financing conditions. Then I would buy it. I hope you will give it for 500 million to me. Then I would seek financing for 50 or 60% post-closing, because then I would knew I had a lot of players who provide me financing on this one. I had a very well-located, diversified property with a decent retail percentage in the cash flow stream, which also I think is a very safe bet in the Paris market. And once I've got the 50 or 60% leverage, I would probably try to invest as a co-investor in a fund which is focusing on sustainable office investments and developments.
Good, thank you.
For instance, MGPA.
And you can sell the building afterwards. That's fine. That'll. Alfred, let's do Alfred.
Well, you know, it's Judex non calculate, as we say, so they don't handle figures and do it badly, and therefore I think there's nothing to really to add to what I already heard. I think the only thing I would do, as already mentioned earlier, I would take, let's say, 1/3 for office, because it's really something which stabilizes your portfolio. Then I would certainly put also some money into refurbishment to try to get buildings which you can really turn into a green building over time. So having really the thoughts we put together to have a little bit of that. And I think I would certainly go also for hotels in the larger Paris region, most probably also in the regions which are a little bit more touristic in the south of France, so that you get exposure not exclusively in Paris. So I think 1/3, 1/3, 1/3, and perhaps give also money to the people who are professional in that, so that we can define a strategy which I understand and say, well, I buy in.
Okay, good. So it looks as though Jean-Philippe and Raphael, you might actually get more than your 500 million, because you've been given it from elsewhere as well. Right, well... Luke?
I guess I would, I'd look at it on a sort of a mid-longish sort of term hold. I'd look at around maybe 10 years. I'd look at investment volumes that are pretty liquid in the market, so sort of 20 up to 100 million if you're then looking at just on the in Paris CBD or just outside of the Paris, outside of in the first ring of Paris. I'd anchor the portfolio with luxury retail. I then look at actually some of the very classically defensive assets that you get at the Paris Haussmannian period properties, generally around 5,000 square meters, or 3 to 5,000 square meters, 30 to 50 million. They'll often have some retail, some office, and some residential. I think the rents and the tenant turnover is always extremely consistent. There's not much void. The rents don't drop, but they don't increase that much, but that's your sort of defensive play. It's the very, very, very liquid assets to have in your portfolio. And then I guess you look at then sort of the more value adds, maybe opportunistic angle for sort of for offices, whether it's to look at the grade A, the redevelopment of old stock or new stock in the right locations, and maybe do something similar somewhere like Marseille, which I think is actually quite interesting if you just focus just on the Euro-Mediterranean zone with a bit of development down there. And then otherwise maybe a little bit of e-commerce logistics in the right location.
Okay, good.